My name is Nick B, and let's get into this week's futures overview, starting with the Forex Factory economic calendar. Monday, we have Fed Chair Powell speaks at 1:55 p.m. EST. Tuesday, we have final manufacturing PMI, ISM manufacturing PMI at 9:45 a.m. At 10 a.m., we also have JOLTS job opening. So Tuesday's going to be interesting. Wednesday, all day OPEC meeting. 8:15 we have non-farm employment change, and crude oil inventories at 10:30. I've been noticing that crude's been kind of on a slide. Thursday, unemployment claims at 8:30 a.m. 10 a.m. we have ISM services PMI. That's going to be an exciting day. And then Friday we have NFP, non-farm payrolls, unemployment rate. So it's going to be rather interesting week. Let's see if that's any of these catalysts for this week is going to help us out in terms of getting a little bit of a clearer sense of direction, because the last few days, more or less, equities have been hinting at a push higher, hinting that we do want to go higher, but not quite showing the resilience just yet. All right, so let me clean this up, clear drawing set. And as always, let's start with the daily and kind of like let's look at the facts here, right? So I have to just put this on subconsciously, this trend line. It solidifies to me that, hey, this is still bullish, right? That core principle, it's still bullish. And what that helps me do is solidify that whatever setup that I go for during the week, my odds or my probabilities probably lean more in favor of me buying dips rather than trying to short. But there's something interesting here we're noticing. The last few days, right? Look at this week movement. Look at how the volume dropped off a bit. And even though the volume started to drop off, we kind of got this melt up. Again, that's showing us weakness, and it's one of two things that can happen. When that volume starts to pour in, if and when that volume comes in, depending on what orders take on sides, it could mean we're going to aggressively pull back down towards our nearest supports. In this case, on ES, I see my nearest daily support really is 56.86. That's going to be my 20-day EMA. I would even put 50 before 56.86. I would put the support at 57.20. 20. That was the original all-time high, and at best, maybe we come down to this area here, retest it, and then continue on higher. Maybe. But then again, on the other side of things, I do understand that if that volume spike does come in, and there is that possibility that it favors orders to the upside, well, we're just going to break those highs and begin making new all-time highs back to, what was it, back in June. June we were doing that kind of action into July. Uh, bit of that melt up action. So that's what I'm looking at in terms of kind of on the big picture, but on the day to day, looking at this exhaustion from last week, I would like to very much see some kind of a pullback, maybe towards 57.20. If 57.20 decides to break down, we're going to be heading down to 56.86. That's my 20-day EMA. And then I've noticed a lot of traders like to kind of target these contract rollover gaps. So below 56.86, we would probably drop down to the support of 56.70, where the rollover happened. Below 56.70, that exposes price all the way down to, I'd say, as low as 56.28, possibly even 5600. Below 5600, I have to take a look at this on the smaller time frames because I can't tell anything else towards the downside. I can only tell that as long as we hold that 5720 support and we retake 5830, again, it's going to go in increments of 20, 5850. Then we're going to look at the round numbers of 5860, 5880, up until 5900. And a lot of talking heads, a lot of guys out there, they're saying 6,000 is a fair target to assume into the end of the year, and I could definitely see that. I was calling out 5,700 into the end of the year, and I was way premature on that. And I feel like my target for of 23,000 on NQ is probably also going to be a little bit premature, judging by how well ES has been growing this year. And again, these rate cuts coming in, that's kind of opening up those floodgates to liquidity, as we're noticing also that the dollar's getting a bit cheaper too. That's helping assets out. Um, with that said, that's the upside and the downside. Let me take a look at this on the 4 hour. Let me take a look at, because we haven't quite broke down everything yet. Let me take a look at what floor are we in between now. So as of late, we broke out of 57.20 higher high, and we formed this higher low at 51.18, 51.20. Okay, we now are more or less in the floor between 57.20 and 58.30. So until we get a break of either or, this in between, I mean, it's great. It's going to be great for the intraday. The fact that I see on the 4 hour ES is below the 20-day of 57.94 leads me to assume that we're probably going to be aiming at 57.58 to the downside if we cannot get back above 5800. I think 5800 this week is going to serve us as an important guideline. Every time price is going to try to get above 5800 and hold it, we'll probably push more up towards the upside, and every time we reject it and hold below it, have resistance at 5800, we're probably going to play the chop game too, just by looking at this floor here. But then again, I got to break this down to the 1 hour. Let's see what we got. All right, so we made a higher high at 5,800 basically, and a higher low at 57.33. We chopped in between there, making higher highs and higher lows until we broke out, made the high of 58.30, and now we are back below this floor of 5,800. Yep, so now you have the floor of 57.78. Okay. So on the current basis here, and this looked like a nasty breakdown. It was more of a grind down into last Friday. But looking at this short term, I'd say definitely if we get below 57.80, there's going to be room to then begin retracing price towards 57.60. 67, below 57.67, 57.54, below 57.54. You're looking at all the previous higher lows because that's where price decided to hold it as support. And if on the intraday we begin breaking these supports, well, the only place price action really has to go from there is to the next support, and that's where our higher lows are here at 57.44. Below 57.44, you come down to 57.33, and then the main levels of 57.20. Let me actually, it was 57.21. I'll adjust it to yellow so it stands out for me. If we break below that, okay, most definitely we're going to have some more downside ensue, probably down towards 56.98. 5700 basically. Below 5700, you're now looking at the higher lows of 5680. Below 5680, you're coming straight down to 5630, 5620, 5600. But at the moment it feels silly. It feels like at the moment we're just a bit of ways away from that. The the good news is we actually broke out last week as well. So if we pull back, all right, pull me back to the previous all-time highs, bounce me out of there. I'll probably end up going higher. Or if not, get me above 58.30. I'll probably begin looking at 58.40, 58.50, 58.60, and so on. That's as much as I see for upside and downside. There's really not much I can dig here. I mean, I can pull this up on the intraday, but yeah, that's where the scalper's paradise is happening. I can't quite go into too much detail on the overview because at the end of the day, on the overviews, what I do my best for is to look for trend and direction on the week, depending on what breaks out, what breaks down. The intraday stuff, I mean, it's on a moment-to-moment basis, right? Like for example, what I have identified here on the 15-minute is 58.30, and then this floor of 57.78. It's no different than what we went over on the 4 hour and the 1 hour. It's just a little more, you have your pulse on the needle, I guess. So if your 15-minute begins to break down 57.78, you could take that chance that you're going to break down and you're going to begin going towards the next higher lows of 57.67. Then you got 57.60, 57.50, down to 57.45, break below that up until that baseline support of 57.20. But The catch is sometimes there are false breakdowns. So, for example, for half an hour, we could be breaking down to the downside here, and then the next half hour to where the hourly candle is supposed to close, price totally retraces. And then what happens is price might come up all the way to 5,800, and everybody might be thinking, oh, great, this is where I knew it. It was a buy the dip. This is where I should have bought the dip. They start piling in to buy it. Sometimes maybe it gives you 10, 20 points to the upside and you could scalp that out. But most cases, it looks to juke you out. And just when you think it was the buy the dip, then it rips you lower. Just because initially on the 15-minute, we did tap below it. If that makes sense. But you got to have your pulse on it. You got to be on top of it. In terms of kind of the trend and direction on the day, it's a little easier to just load up the 4 hour, 1 hour, and depending on the high or low that you're breaking down, it doesn't take much to tell where price is going to go. All right, enough of that with ES. Let's go to NQ. Famous NQ. Okay, pull this up on the daily. Now, NQ is the guy who's pretty much lagging behind, but the great news is look how beautiful this looks here. We made a higher high over at 20,030. Came all the way down to solidify a higher low at 18,350 it was. And then from 18,350 just took on a melt up towards the previous higher highs, broke out of them, made new higher highs. And now the question is going to be, where are we going to create these higher lows? Are we going to do it here at 19,600, 700 area? Are we going to do it here at 19,200? That would be a fair retest. Are we even possibly going to see it at 18,800, 18,700? Maybe, maybe. But as long as we hold the support of 18,350, there's definitely, I mean, not there is, but NQ will definitely head higher. Now, the first thing I want to take into account is what happened before. Yes, on the daily, it's still looking bullish. You got that primary trend line that's supporting price to the upside. Great. Let's identify what happened, what happened here. Oh, yes, so this was a higher high and a higher low back in March and May when we had that initial 6 to 7% pullback. Then over here when we made a higher high of 20,983, the correction of 10% came down to the lows of 17,330, still not below where our pullback earlier this week was. Very wonderful. So that created a higher high, higher low. But along the way on the intradays, of course, we were creating something else, a secondary trend within this main trend here. And what was happening was we were making lower lows, lower high, lower low, lower high, lower low, lower high, low, right? So we made this low here at 17,340 or 350 it was, and began bouncing. And the rule of thumb for me, because I most of my analysis relies, I would say, on Dow theory, higher highs, higher lows. Just keep it simple, right? Up or down or sideways. And the rule of thumb is when price breaks above the second lower high from a downtrend, you are most likely to experience a trend reversal. And notice what happened here. We had our lower low, lower high, low, lower high, lower low. So this was lower high number one for me, 19,700. And along with the rollover that we've had, that was the first step to breaking above it. Of course, we incurred a bit of a pullback. I understand if this was maybe profit taking. There was definitely a ton of uncertainty still looming in the market back, well, from end of August into September. September's been a rough ride. But to say the least, we're back above 20,000, 19,700, which was the first lower high. And then again, the second lower high for me was 20,100, where we tried to tap up on it the first time, couldn't do it, but the second time around now, we broke out of it. We are well above it. And again, as long as we hold above it, that's kind of helps guide me in telling me that, hey, man, you might see a pullback, but most likely, as long as price can remain above the support or retake it, if we pull back below it a bit and bounce off of the 20-day EMA on the daily and then retake 20,100, great, you're on your way to the upside. Or maybe we never even see it. maybe we come down. Maybe we come down to 20,100. We bounce off of it. Maybe not. Who knows? But with that said, I know as long as we are above 20,100, we can now target the previous lower highs, and you have one here on the intraday. It's better to see it's at 20,170. Above 20,170, you really have nothing in the way until 20,600. Above 20,600, you're looking at 20,700. Above 20,700, you're looking at 850. Excuse me, 800. Above 800, you're looking at 900 psychologically, and really 21,000. Above 21,000, you're looking at 21,250. That's in terms of upside. Again, so long as it supports this trend here. And again, we have the features that look like they do, right? We have this higher high now. We have this higher low. We are above the second lower high. Again, worst case on the daily, I need to mark off where is my 20-day. That's my best friend, especially in trend days. So long as price is above the 20-day, you're going to go higher. If we start breaking below the 20-day, we're probably going to begin to spill over. So my 20-day is at 19,750. So at worst, maybe this week, maybe we pull back to 19,750, and so long as the daily candle closes back above it, I would like to see us specifically get back above 20,100, and that's a green light to go long back again towards 20,500, 20,600 being the next key resistance. Um, Now let's take a look at kind of the floor that we're in now. And I will mark off, I would say, the previous higher high and higher low. I'll put a little more emphasis on the previous higher high and higher low rather than marking off the lower high, because I'm focusing more on the now. This was more of a guide for me to get an idea on where is trend going to go, what is it going to do. As long as we remain below that level, we're probably going to continue off lower. But now that we're above it, now that we've created a higher high and a higher low, I'm more prone to see where's most likely that next resistance level. Now, excuse me, support level. And in this case, it would be 20,030. Let me go ahead and adjust that. It did a really nice job breaking out of it a few times too. You could see, let's put that up. You could see a few times we broke out, price tried to hold above it once, twice, three times, four times, and we took off. And it looks like we might come back to it. So let's take a look on the 4 hour. What's going on here? Okay. So we made a higher high, we made a higher low, made a higher high, and now we are beginning to break this floor. And this floor starts at 20,183. Now, for us to get an idea of where price is going to go next, depending on the supports that it breaks, we're just targeting the previous higher lows. And sometimes they do line up to your exponential moving averages. Like in this case, if we continue on below 20,180, we're probably going to end up heading towards 20,070, 20,080 from 2 weeks ago. That was a very important breakout level for us, and a break below that level would take us straight down towards where the previous higher highs of 20,030 were. Now if we break below 20,030, that exposes us down towards the higher lows of 19,950, down towards 19,860, below 19,860, straight down to the floor of 19,500, 19,700, 19,600, 19,500 would be the absolute worst. That would be kind of like, whoa, okay, hold on. Because if we would break down then below 19,500, that exposes us automatically, I would say, down towards 19,200. Ever since we broke out of 19,200, we didn't quite look back at all for a retest. So maybe sentiment that's been eyeing the downside the last week or two, maybe perhaps they might get it. They might get it. But again, it's all going to depend on what does price do? How will we react with the catalyst that we have this week? And is the labor market really going to influence or help us get an idea of direction into the end of the week? Are we going to kind of remain in this new floor that we're between 20,030 and 20,540? Or are we going to go for the daily pullback? And again, I'll put this up on the daily real quick. The daily pullback is 19,750. Is that really bad? I can't say it's bad. Maybe. If we continue on towards 19.5, 19.2, 19.2 is like, oh boy, okay, oh no. Maybe things are going to get a little shaky because below 19,002, and you really don't have much support at all until really 18.7, 18.5. And that's tough. Then it becomes a game of timing. When are we going to see these targets? How fast? We don't know that stuff. We can only base it off of what's happening now. Um, and the other thing, in terms, I know I've been kind of prude and a little bit more eyeing the downside, but there's another possibility where we can just remain where we are right here because the fact of the matter is, end of the day, we are breaking out. We did break out on NQ 20,100 kind of, or 20,030. And 20,100 helped us kind of solidify that as support. So as long as we remain in those areas and then hold up above it, I would say it would be a grind, a melt up by the dips every time. And to get a better idea, that I definitely need to go on the 1 hour. And the first thing I'm going to identify in the 1 hour that's closest to me is 20,300. And above 20,300, that's 400. Um, these two levels for my hourly intraday analysis are lower highs. If I break above the first lower high and if I break above the second lower high, most likely there is strength and confidence to head up to the upside. But why I think that might not unfold yet is, well, that's not true. We have to see where the open takes us. But if we end up below 20,187, because that is the baseline support for where price try to hold us up, where we made this lower high here on the 1 hour, if we fail to hold it, if we break below it, we're going straight down to the next higher low, 20,130, 140. That was actually a really key level for us last week too. We broke out and broke below it a few times. We played games until finally, in an overnight session, we broke out. Oh, excuse me, it was a U.S. session. We broke out. We retested that area of 20,140, and then into close, into overnight, it was just a straight squeeze job from 20,000. Basically, it started at 20,140 and it went all the way up to 20,500, 20,540. So that was a nice 400-point run up. And again, look where we're heading, below 20,001, 185, 180. We're going to just end up back at 20,001, 130, 140. If we break below 20,000, 140, 130, you can definitely look to short, possibly down to 20,063. The question is that I'm thinking though ahead for this week is it going to be more worthwhile to short on rips if we're breaking supports on a rip up you short it, or do we buy the, or do we short the breakdowns, the initial breakdowns, because it's been wishy-washy. It kind of depends on the day. Sometimes momentum will help drive you on that first initial breakdown. I've noticed what happens is it'll give you 20, 30 points, maybe 40 points, but then it'll retrace 60 to 80 of them. I've noticed to shake traders out, and then what happens is you start thinking it's a buy, but really you short the rip from that 80-point run up, and then it falls back down. That's kind of exactly what happened into the close here, actually, right here. We broke this support of 20,280. It kind of teased us a little bit, came back all the way up to 20,360, broke it again. Let's see how low we got from 280. We got down to 235. Okay, so it gave us about 40, 45 points, only to then retrace almost 100 points back up to the highs of 20 session highs of 20,397, and then reject right below 20,400 to the lows, to the support session support of 20,235, bounce up a little bit again, another 70-point bounce to 20,294, and then if you shorted the rip, you did great. It kind of pulled back. You did great. You caught that support breakdown and initial flush to where this wick was. This wick out was crazy too, but we'll see. I mean, we'll see what kind of the opportunities we have. NQ is definitely looking more favorable than ES. Let me take a look at ES on the hourly, and let me clean this up. Ugh, it just like from 57.30 to 58.30, it just looks terrible. Looks terrible, but it might be it might be very lucrative. So we're below 57.87. Our wick here of 57.78. I'd say 57.78 breaks. I mean, how can you deny that short? It would probably come down towards 57.67. Below 57.67, you're going to 57.50 at least. And on the 1 hour, that's your 200-day EMA. Let me see the daily really quick. Where is our weekly? 56.86. That's a nice scalp. The risk is rough though. The risk, you would have to put a 57, probably 57.80, 57.85 stop if you wanted to short that. And then again, similar to NQ, the two lower highs here is 58.04, and then especially if we get above 58.20, yeah, it's gonna go straight for 58.30. Could probably ride it out above 58.30 for another 10 points to 58.40. That's a nice setup to the upside. I don't trust it. That's what the bottom line is when I'm looking at it. I don't trust it. I don't trust it because I've seen how it breaks down. I've seen how it shoots up, and then it gets you all excited on a direction, only to do the opposite of it. I don't wanna walk right into that. So we'll see. It's going to be an interesting week. It's going to be a great week. We'll take our time with it. I think also that we kind of grinded in this area that we've been in the last few weeks or so. It gives us a good opportunity, I say, slowly to carve through the intraday. I would like to take on more short the rip and buy the dip scenarios rather than buy the breakout. That was the last trade of on Friday that cooked me. I went for the breakout. That was so silly. I should have known better, but it's all right. We dust ourselves off, we get better. But I'm definitely looking forward for this week's intraday action. I want to see if I could be quick enough to get in on the breakdowns if momentum treats me right. If there's volume, that's what's important to me. If I'm gonna go for momentum, volume. That was my mistake, right? I went in on also when it was kind of crappy volume on equities. It was kind of slow, and that slowed me down. But other than that, I mean, should be a solid start to October. Really, again, to remind you, the fireworks are really going to start in November, but October, first 2 weeks, we're going to settle in, definitely get these catalysts, these main ones out the way, and it's going to be a great week. With that said, have a solid trading week ahead, and I'll catch you on the next one. Cheers.